Some assessment of today's testimony by Mr. Bernanke. We are joined by Conrad DeQuadros, senior economist at RDQ Economics. Conrad, welcome to Bloomberg. Thanks so much. Good to see you as always. You say the Fed has no interest in surprising the markets on policy matters. Why not?
Well, I think that the Fed laid out the whole idea of transparency and gradualism. A lot of that was Bernanke's doing when he was a governor. And over the past 10 years or so, there's been very little surprise in terms of Fed policy moves, particularly the last time the Fed started to move away from an extremely accommodative stance of policy. So I'd be very surprised if anything's changed.
But might I ask, you speak of transparency. Is this something that would have been done given some other economic climate? I guess I'm asking, was his hand forced? Was there enough pressure from congressmen such as Ron Paul saying, we need you guys to open up the books, we need to see what's going on here?
Well, in terms of the monetary policy decisions, the transparency, the idea of transparency being the right way to go was a direction that the Fed took back the last time that they started raising rates. Very different to the period of rate hikes in 1994 and 1995. So I just think that the Fed believes that market volatility that's created by Fed uncertainty is not the right way to go about things, and so they're going to do it differently this time.
What do you think of this characterization of the economy as a nascent recovery? Tom Keene said, well, it just assumes we're seeing these fits and starts in different industries, different parts of the economy, and therefore we're keeping the Federal Reserve rates low for an extended period. We're still seeing that language as well.
Well, I don't think there's much disagreement with Bernanke's characterization of the recovery. The recoveries are never straight line events. We obviously have some economic reports that are coming in stronger than expected, some such as this morning's new home sales report that are weaker than expected. And I'm in agreement with the way Bernanke has characterized the economy, that we certainly are recovering. A lot of the recovery has to do with a correction in inventories and a slowing in the pace of inventory liquidation. But I do think that the recovery is self-sustaining and that we're in a cyclical event here that will result in moderate economic growth this year.
So nothing in the comments today encouraged you to change your outlook on where the Fed funds rate or even the interest paid on the bank reserves are headed?
No, nothing resulted in a change. I think that the testimony was very straightforward, but that doesn't mean that it wasn't important. In the past week or so, there have been a couple of changes. First, the discount rate, and then yesterday, the Treasury's move to ramp up the supplemental finance program, and that's resulted in a little bit of uncertainty with respect to the direction of policy and the timing of the exit strategy. But Bernanke has cleared that up, and he's suggested that policy will be on hold for a very long time.